So insurance companies, I think, are going to be investing heavily over the next few years in building digital platforms to reach their customers, both in the forms of enhanced websites and in apps for mobile devices. Others will take the form of a digital interface to allow brokers and agents to operate much more efficiently with their insurance companies. Often this technology will be developed in-house, but in other cases it'll be developed by third parties, for example by so-called insurtech outfits. But the result will be the same. The insurance companies are spending significant amounts of money either on the in-house development or on procuring third-party applications. So the tax function is going to need to look very carefully at this process. They'll need to understand the nature of the expenditure and understand whether there's a tax deduction that's going to be available for it. Will R&D tax credits, for example, be available? Where should the expenditure be incurred? How should it be spread amongst the group? They'll also need to think about the tax sensitization of these platforms. Will the platforms gather the right tax data from their customers? So, for example, for FATCA reporting or Common Reporting Standard, they need to make sure that they're gathering the appropriate data and that the customer is not inconvenienced as part of that process. There's another angle to this too. Increasingly, we're going to see smart applications where cross-border sales maybe will be possible where the regulatory environment permits. So, for example, if you have an application where a traveller arrives in a country, turns on his mobile phone and is immediately offered travel insurance because the phone has detected that he's crossed the border, that is going to introduce really some quite interesting questions from a tax point of view in terms of the place of sale, both from a direct and an indirect tax perspective.